And just like classic style, for the Singaporeans out there, I was a classic Bodo earlier. I pressed start streaming instead of start recording. And this whole video, this is the second time I'm going to do it. But you know what? This one's going to be better, trust me. So welcome back to the Everyday Growth Advisors pre-market live stream. I hope you had a good week so far. I just want to cover some really important stuff that's been going on with the markets lately. But I want to start off with a message for you guys. If you have been going through a tough time in the past 2 weeks, I highly sympathize with you because this market has not been easy. Okay, and more importantly, we've been seeing a very big increase in volatility, just kind of as we expected, right? So you can see the amplitude of this range here, for example, versus this range here, right? We're seeing a lot more volatility, and this is cause and effect of the market having capital pulled multiple directions. Setups are seeing a lot of inflows and outflows very quickly. So this is a period of time where if you see profits, you have to take it right away. Okay. Just 2 weeks ago, I had a kind of a off mojo week where I was not in sync with the market and just didn't even take one session more, and I literally just shook it off and came back to the markets to close out this week with $13,000. I think it is a pretty decent week for considering how everything has been going on. We did play a Coinbase earnings play on this 58 vertical debit spread. It was a 41 cents debit. I alerted my group on Discord about it, and we took the trade based on the due diligence that we had. This is a great little play. So in case you guys haven't been following our earnings score so far, the first week we had 3 out of 3, second week we had 2 out of 3, and this week we have 1 out of 1 so far. Not sure if I'll take another one, probably not. But maybe next week if I get an opportunity on some good plays, I will take those. Let's talk about macro a little bit. So the Fed has its work cut out for itself right now, mainly because unemployment is the main thing that they're looking for. And they have to see unemployment go up. That's the only way the economy is going to kind of cool down. And as you guys notice, in the past we spoke about how the market was going to go through a stagflation kind of a scenario. We're finally here. Recession has already been underway for the past 1 year, so that's the reason why a lot of these companies are performing sluggishly. And you know what? A lot of the market has been being held up by amazing results with Microsoft, Apple, right, Google. A lot of these big tech have been doing pretty good lately, despite the environment, which they should, right? They are leaders in their field. So talking about that, unemployment has been pretty tight. Now think about it just from this perspective in the simplest way. We are in post-COVID era now. And post-COVID era, everybody's looking for jobs. They're no longer, just staying at home and doing nothing, right? So the job market is very tight right now. And when you couple that with a economy that's slowing down, then you see some cracks in the perception of the market. Now, lucky for us, the market has already passed through the worst part of speculation. Now we are climbing the wall of worry. We're going to have lots of dips to buy and a lot of price action that will go down, up before actually getting into all-time highs, right? So in order for us to get there, the next green light we need on our highway is going to be the unemployment numbers coming in hotter than usual. I know that might sound a little messed up, but that's just the way things are. In order for us to see prices come down and inflation signal that it's under the lid, we need an unemployment number that is much higher for the Fed to consider a interest rate pause or interest rate cut sometime next year, right? So in order to get that, the market has to see those higher unemployment numbers. So depending on what the numbers are today, which is going to be like right now in 2 minutes, it's 8:28, 8:30 is when it's going to be released, I believe. We'll see the market move in a specific direction. So you'll probably be able to see it live with me, and I'll commentate a little bit. Now, let's talk about NASDAQ in comparison. Much stronger. You can see that the amplitude movement here didn't actually even get to 12,860, which was key level prior. We got short of that and then reversed with a very strong pin bar on the 4-hour, right? So this is a pretty good sign that, and that pin bar was on high volume too, right? You can see that. That means that there was a lot of buying and selling, and the resulting force that won was bulls, right? You can know that because the pin bar is closing, on the top here, and when it opened, it failed to make a new low. And then from then you saw another bullish candlestick, and then Nasdaq is now kind of slowly moving back up. So, I say change your playbook and change your mindset. This is a high volatility market. Move with the punches. You can go long and short. That's what I've been doing. Yesterday, I literally took short positions on Microsoft and a bunch of other things, and I went long with SPX, right, as a hedge, and it paid out. So I took quick 20% on that one and ran, right. So you can see here, this trade alone was about $2,500, which is not bad. Yesterday was a decent trading day, and so as we here we go. So you're about to see the market move here, right, on unemployment numbers. And we're going to start to see the effects of this. Now, right before that, I want to bring your attention to Amazon. This is one you should watch today. It has a very high likelihood of going higher. So let's see what happens with unemployment numbers here. Okay. Hold on, stand by while I find the information required. But yes, going on to Amazon. This is definitely one of the ones that you should watch closely. It's been really strong compared to market. Oh, so payrolls came in 253,000 versus 185,000. More employed people. God damn, that's no good, right? We'll see what else the data comes in right now. Just payrolls came in. The market's not gonna like that, right? Imagine more people being employed now, right? We want less people to be employed. This is gonna screw the pooch. This is gonna make the Fed want to hike for a longer period of time. Immediately, has to be our thought process, right? Unless we have another piece of data here that give us more information. Okay, so now coming in, April non-farm payrolls 253,000 versus the March 165,000, and let's see. February was 248,000 and previous was 326,000. So, oh boy, this is not good, right? We'll see if something else comes in. Okay, so then we have unemployment rate changes little at 3.4%. Oh, so what was the unemployment rate? Okay, looking for that right now. Consensus was 3.6% and unemployment rate's 3.4%. Damn, right? This is no bueno, right? This is no bueno. We don't want this kind of a situation. Now the job market is getting tighter, right? This is not a good look. It means the Fed is going to have a tougher decision now to continue hiking interest rates and potentially put us in a position where valuations will be suppressed for a longer period of time. So you're going to have to hold your inner bull for at least today's session. Okay, now that's how you're going to make sense of the data for now, until and unless you see something else in the price action, right? The Treasury 2-year yield is up 18.9 basis points on the news, right? So more uncertainty, right? More uncertainty. People flocking to bonds again, right? The 1-month yield went up huge right now to 23.6%, right? So yeah, this is not looking very good for SPX right now, but we'll see how the price action plays out. So looking at technicals, you have some very key levels. I'm just going to kind of bring you guys through this. Very simple. Your risk to reward ratio to the upside here is pretty decent. In my opinion, it's a smart move to take a bullish play. Despite what you see today, if you can get a nice little pullback, I would highly recommend adding a little bit of a long position because the risk off is pretty slim. So you can do that with a nice risk to reward ratio to the upside here. Just from that pure technical perspective, I think the upside trade makes most sense. However, from the job information that just came out right now, that may change your trading plan. And so what you kind of want to wait for is either to cross above 4,100 or cross below 40.60. You can't do the just take it and hope something goes your way plan anymore, right? So you have to either wait for those two pivots to be breached and then wait for a bounce on those pivots to play them. Now, that's what I would do personally. And then with NASDAQ, you're still just within range here. NASDAQ not really getting affected here much, right? You can see the move is not even registering for this, right? A lot of strong stocks in here. IWM, this one might see a potential break to the downside if things get ugly with SPX, right? And then gold here dropping down on the news because this doesn't really support gold prices that well, right? So So, okay, let me bring two trade ideas to your attention, and then I'm going to end the stream. Once again, if you're going through a tough time, reach out to me. Message me on Instagram. Look at the description. We have a lot of ways for you to connect with EGA. If this is your first time listening to us, or you like the stream, come back. We do pre-market live streams live, but today, just because I can't be around, I'm recording this before I leave my place. But make sure you smash the like button. Leave us a comment. Maybe you want me to chart something in the next session. Leave a comment with the chart that you want me to do, and I'll have a look at it and do it for you, right? So Amazon, this one's been relatively strong from the past couple of sessions. I highly think that demand here is already higher naturally as SPX was melting this entire week. You can see Amazon held completely, right? It held. Even the 4 hour, it didn't really move that bad, okay? Not that bad. It came down a little bit, but yeah, this is pretty strong. It held pretty well. And I've been looking to take a bullish position in here for a potential play up to 114 or even 122, okay? The risk off is going to be around 97, 96. You can choose how big of a risk off you want. And that sets up a really nice trade here where this could be 1:2 or 1:3 for a longer term swing, okay? So that's what I'm looking at for this one. With Netflix, it still needs to pan out a little bit more. If it doesn't break below 316 with good volume momentum and retest 316, so we want to see something like this, right? And these are all the extensions for the Fibonacci's here, 23.6, 38.2, 61.8. Then, depending on how far it's going to breach here, we'll see potentially an extension down here. If it doesn't break 316, then bullish bias continues. Simple as that, okay? So these are two opportunities I want to put to your attention. But I hope you guys have a good weekend, and we will see pretty much more on what's going to happen during this trading session in the next week. I hope you guys have a good weekend. I'm gonna, just get you guys in check here, and I'll see you guys back on Monday, Wednesday, and Friday next week. Take care. Till then, peace out. Love you all.